Welcome to Talk Tickers, where we're breaking down the absolutely explosive Q1 earnings from Keysight Technologies. The numbers themselves were really strong, but what happened after the bell? Well, that's where the real story is, and that's what we're digging into today. So here's the big question, right? What on earth did Keysight say that sent its stock rocketing up over 15% after hours? I mean, this wasn't just a little beat. This was a move that made the entire market stop and completely rethink what this company is worth. And yeah, just look at that number. It really puts the move into perspective. After closing the day at $245, the stock just took off, hitting nearly $283 in extended trading on February 23rd. That is a massive statement, and it's the kind of move that gets everyone's attention. All right, here's how we're going to break it all down. First, we'll look at that wild after-hours pop. Then, we're diving deep into the numbers that lit the fuse. After that, we'll get into management's very confident take. See how it all fits into the bigger picture with AI and defense, and then at the end, I'll give you our final take on what it all means for the stock. Okay, so let's start with that initial reaction from the market, because, it wasn't as simple as the numbers dropping and the stock instantly going vertical. So check this out. At 4:05 p.m., the press release hits, and the reaction was kind of quiet, surprisingly. It wasn't until the earnings call kicked off at 4:30 that things really started heating up. It's like investors needed to hear it directly from management to really digest the details. It was this slow burn that just exploded into a wildfire after hours. So what was the fuel for that fire? Well, it all comes down to the numbers. And this wasn't just a slight beat. This was a decisive, no doubt about it, blowout. Let's look at the report card. Revenue came in at $1.6 billion, just crushing the $1.54 billion Wall Street was looking for. And on the bottom line, their adjusted earnings per share hit $2.17. That's an 8.5% surprise. In any market, a clean beat on both top and bottom lines like this is going to get rewarded. But those headline numbers, they don't even tell the whole story. The momentum underneath is actually even more impressive. Yeah, revenue growth of 23% year over year, that's great. But look at that second bar, order growth, up a whopping 30%. That is a huge tell, signaling that future demand is actually accelerating. And all of that strength leads to this monster number, a record backlog of $2.75 billion. For an analyst, a number like this is pure gold. Why? Because it represents future sales that are already in the bag. It gives management fantastic visibility and just de-risks the next few quarters in a big way. So the numbers were great, but the story that management told on the call, that was all about total confidence and conviction. I mean, listen to the CEO, Satish Donasakaran. He came out and basically said, look, these were outstanding results. He framed this amazing quarter not as some happy accident, but as the payoff from a long-term strategy that's now colliding with a perfect storm of huge market trends. That's a powerful message to send. And these are those massive trends he's talking about. We're not talking about small stuff here. We're talking about huge multi-year shifts. You've got AI data centers scaling up, defense modernization, the race to 6G. Keysight's equipment is absolutely critical for every single one of these. They're sitting right at the epicenter of it all. And here it is. This is the slide that likely sealed the deal and triggered that huge after-hours pop. The guidance for next quarter. Just look at it. They guided for both revenue and earnings well above what Wall Street was expecting. This wasn't just saying things are still good. This was saying things are getting even better and fast. It signals an acceleration in growth. So we know Keysight had an incredible quarter, but how does that stack up against what everyone else is doing? Let's zoom out and get some context. The outperformance here is it's dramatic. It's not even close. Over the last year, Keysight stock is up nearly 40%. That's more than double the entire tech sector and almost triple the S&P 500. This is a company that isn't just participating in the market, it's leading it. Now, of course, no company analysis is complete if we don't talk about the risks. And management was upfront about one potential headwind that everyone needs to keep an eye on. They specifically pointed out some uncertainty around these things called IEEPA tariffs. It's related to international trade. The key thing to know here is that their super strong guidance for next quarter does not include any potential hit from these tariffs. So that creates a known unknown, and it's definitely the main risk to watch from here. All right, so we've looked at the numbers, the story, the context, the risks. So what's the bottom line? What's our take on Keysight from here? Our rating is clear, outperform. We think the market is just now starting to wake up to a pretty fundamental change in this company's story and its growth potential.
And our thesis here is pretty simple. It's built on 3 pillars. First, they are in the absolute sweet spot for these huge long-term spending cycles in AI and defense. Second, they showed incredible operating leverage, which is just a fancy way of saying as their sales go up, their profits go up even faster. And third, we think the market is finally starting to see Keysight not as just some cyclical company, but as a premium, consistent growth story.
So what does that mean for a potential trade? Well, our whole thesis is that even after this big jump, the market still hasn't fully priced in this new narrative for Keysight. So one idea to consider is looking at long-dated call options, maybe 6 to 12 months out. It's a way to play for more upside if the stock's valuation multiple keeps expanding as this AI growth story really takes hold with more and more analysts. And that really leaves us with the big final question. We just saw an amazing quarter and some seriously powerful guidance. So is this just a one-time thing, or are we right at the beginning of a multi-year acceleration for Keysight, an acceleration powered by the biggest tech trends of our generation?
This is not financial advice.